Hi, I'm Jonathan Banks, Executive Automotive Analyst at NADA Used Car Guide with this month's market update. New and used sales in April continued the strong trend witnessed in March as the spring season brought warmer temperatures and stability to the market. With the second strong month behind us, we can safely say that weather was the primary culprit of the slow sales at the beginning of the year. On the new vehicle sales front, deliveries improved by 8% in April compared to a year ago. And just like last month, sales were solid industry-wide. Mainstream brand sales were in line with the overall industry growth at 8%, while luxury brands realized 11% growth. Deliveries through the first 4 months of 2014 climbed as a result of the strong April, and sales are now up 3.1% for the year. April's seasonally adjusted annual rate rose by 7.5% from last year and reached 15.98 million units. The SAAR's growth versus last April reflects the highest increase since August 2013, besting last month's 7.3% rise. With regards to domestics, Fiat Chrysler posted another solid performance as sales grew by 14%, primarily due to Jeep increasing sales by 52%, with the new Cherokee once again influencing the brand's success by adding over 15,000 deliveries. General Motors achieved its best result of the year, with sales rising by 6.9%, and all of the company's brands realized positive growth. Subaru had another phenomenal month with deliveries up by 31%, behind strong sales of the Impreza and XV Crosstrek. Mazda sales were up 13%, thanks to its Mazda 6 and Mazda 3 models, which were up a combined 24%. Nissan maintained its positive momentum with total sales improving by 18%, while Toyota began to pick up its pace with deliveries up 13% across its 3 brands. European brand sales were positive nearly across the board, with Audi and Mercedes leading the pack with sales up 19% and 11% respectively. Part of the strong sales can be attributed to increased discounting. Per auto data, average incentive spending climbed by 2.7% from a year ago to reach $2,600 per unit. Through the first 4 months of the year, incentive spending averaged $2,700 per unit, up 7% from a year ago. On the used side of the market, after prices rose by an astounding 3.7% in March, wholesale activity steadily returned to normal. April experienced slight seasonal price declines on 0 to 8-year-old vehicles of 1.1%. With this expected decline, the month's performance left NADA's seasonally adjusted used vehicle price index little changed at 125.8, tied with March as the highest figure reached. So we now sit with used prices once again at historically high levels. Price movement at a segment level was directionally in line with NADA's expectations as prices dropped the most for the segments that experienced the biggest increases in March. After rising by an average of nearly 4% in March, prices for mid-sized cars, utilities, and vans fell by an average of 1.3% in April. Compact utility prices followed suit, dropping by 1.2%, while compact car prices slipped by about 1%. While prices for all compact cars and utilities and mid-sized cars were lower in April, it's worth noting that depreciation was on average 1 percentage point less than what was recorded for the month last year. So the market even for these vehicles remains strong. In a reversal from a months-long trend, large pickup depreciation was among the market leaders, as prices for the segment fell by 1.3% last month. April's decline was the 3rd largest recorded for the segment in the past 2 years. Prices for luxury utility and luxury car prices fell by less than 1%, while large SUVs were essentially flat for the month. On an annual basis, market prices through April were 2.3% higher than they were a year ago. Prices on large pickups continue to outpace the market with an 11.5% increase year over year. Price growth for large SUVs has also been stellar, with prices up 8% compared to last year. The next closest segment is nearly 4 percentage points lower than that of pickups and large SUVs. Mid-size utilities and vans also continue to exhibit annual gains in price. Prices for the 2 segments are up by an average of 4.5% year to date. And it's been more than 18 months since prices for either have been lower on a prior year basis. Redesigned models entering the market in volume are helping to drive up midsize SUV prices, with 3-year-old returns of the 2011 Grand Cherokee and Ford Explorer showing 30% gains compared to their prior generation 3-year-old that returned to the market last year. Compact utility, compact car, and midsize car prices are 1.5 to 2.9% higher year to date, while luxury utility prices are up by 0.9%. Luxury cars are the only segments with prices lower than they were a year ago. Going forward, NADA forecasts that typical seasonal forces and an increase in supply will push prices down by approximately 3% in May. Depreciation across segments is expected to be tightly dispersed, with prices for the majority of segments to drop near the 3% market average. Exceptions to this include large pickups and luxury mid-size cars, where prices for the former are expected to drop closer to 2%, while depreciation for the latter is expected to be near 3.5%. Looking beyond May, there is little to suggest that used vehicle prices will veer onto an unexpected course. Energy prices have remained stable. University of Michigan data shows that consumer sentiment is trending upward, and job growth rebounded nicely in April following a disappointing first quarter. The fact that better summer weather is finally here and there are no impending lawmaker impasses on the future horizon reduces the potential for volatility in the marketplace. Given these points, NADA forecasts that price movement will follow a familiar course through the summer, with depreciation progressively moderating to rates between 2 to 2.5% during the summer months before rising again in August. For additional market insight, please download May's edition of Guidelines. Thanks for watching.